Welcome to the Generation Hustle podcast, a show that explores the world of business, entrepreneurship, and culture, all centered around the millennial. I'm your co-host Sheriston, alongside my good friend Amin. And today, we're going to be talking about the stock market. How does the stock market work? There are individuals who have no idea what a stock is, and then there are those that invest passively for a retirement nest egg, and then there are those that have quit their jobs entirely and made a fortune just trading on the markets all day. Whether you're an investing rookie or a seasoned veteran, the stock market is a world on its own that can change your life for better or worse. And that better or worse depends on how much you understand about the markets. So this week, we have the pleasure of speaking with Emerson Baker, Vice President of Institutional Sales at Horizons ETFs. With a finance background and a Level 3 CFA candidate himself, Emerson has built his career on understanding on how capital markets are being shaped around the globe. We talked to Emerson about the stock market and why stocks are at an all-time high right now during a global pandemic when most businesses are shut down. He also dives into the concept of wealth management and the steps that we should be taking today, right now, so that we can save for our futures. I know I definitely need the tips, so I'm just going to let Emerson do the teaching.
We also want to give a special shout out to today's sponsor, Podcorn. So let me ask you this. You're a growing brand looking to partner with other companies to help scale your business? Or you're like us, a podcast looking at brands to partner with? Like many business founders, you find it extremely difficult to find these opportunities. Well, that was their case originally for the Generation Hustle podcast before we started using Podcorn. Podcorn is a marketplace connecting podcasters to amazing sponsorship opportunities, such as host-read ads, interview segments, topical discussions, and more. With Podcorn, there is no middleman. Podcasters of all sizes can browse and choose opportunities right on the platform, set their own rates, and collaborate with brands directly with no exclusivities. This opens up the opportunity for you as a business or a podcast to scale much faster. So what are you waiting for? Check out podcorn.com to start growing.
Emerson.
What's going on, guys?
How you doing, man?
I'm good.
Well, hey, thank you for doing this, man. I appreciate it, and we're super excited.
Yeah,
We wanted a market guy on, and we wanted to grill him on what's going on in the world, you know?
Well, I hope I'm not going to disappoint because I'm probably more confused than everybody else.
Yeah.
What
Hey
a
man,
time to be alive.
if that's coming from a person like you, then investors like us, we're even more confused, right? So.
Exactly. What a time to be alive, man. So again,
Absolutely.
thank you so much for being part of this. We wanted to kind of just like start off and get some background on your career. Obviously, you've been in wealth management in the ETF space for quite some time now. So I kind of want to just get your background on that and what attracted you to the ETF industry to start off.
Yeah, 100%. I landed in ETFs totally by accident. Like I came out of school and I knew that I wanted to be in finance. I didn't entirely understand what that meant, outside of what I learned in school. Knew what an ETF was, knew what a mutual fund was, knew what investments were, but, what does that all mean, right? And I think that a lot of kids come out like that, but I can put my hand up and say that I was totally clueless, right? So through reaching out to people on LinkedIn, I ended up with an interview at BMO. I distinctly remember them asking me what an ETF was in the interview. That was one of the questions that I bombed. But I had a real connection with the ultimate hiring manager there. And he actually personally picked me to be with one specific guy. You come in an associate role in that job on the sales team to be paired with our institutional sales guy from an ETF perspective. And, the fact that I didn't know what it wasn't a big deal. I learned quick, whatever, but that was an amazing experience because he ultimately is my mentor and what started me in it. And my job was interesting because I was split between the exchange traded fund business and then also our mutual fund business that we had at BMO. So on one side, I was working with a gentleman who's just like straight out of the Wolf of Wall Street kind of guy, like absolutely nuts, but so intelligent, so intense, learned everything I know how to do from him. And then on the other side, I was working with another guy who was retail mutual funds, and our region was Durham, and then also Sault Ste. Marie to Timmins.
Okay.
So it was like a very different, very stark contrast between the two things that I was doing. And I learned very quickly that ETFs were the place to be, 100%. And obviously that's been the growth in the States. I mean, I would argue that Canada is about 7 years behind the United States in terms of adoption, and it's exploding here, right? So that was how I got started. And I mean, it's obviously, it's amazing as people, sort of around me and all the different facets of finance are trying to get into this thing now. I always feel really, really lucky because I kind of just was like, well, I'm here now.
One of the first movers, right?
I guess so, yeah. But it wasn't some stroke of genius that I had coming out of school.
For sure. So maybe can you tell us and our listeners as well kind of about the ETF industry and how it's different from stocks and bonds, and if it's better or worse investment option?
For sure. Never going to say better or worse, it's just different. But what it does give end investors especially is it kind of just levels the playing field. The thing with you going out and buying a stock, right? You might really love Bell. And this is a good example in Canada because they're so concentrated, right?
Right.
The reality is that Rogers is pretty similar, right? There's a couple of, very finite, minute differences between those two stocks, but generally when one does well, the other one does well. And so that's really the purpose behind index investing. And indexing has been delivered by ETFs traditionally over time. And that's where the explosion of ETFs has really come from, is that sort of passive idea where rather than a portfolio manager going through and saying, well, I really like Rogers versus Bell, but I can only have one, just saying, they're not that different. Buy the whole index. It's very, very inexpensive. And the numbers suggest that that's actually the way to go, that often that sort of broad basket and pool of stocks or bonds or whatever the case may be is going to outperform just by virtue of the fact that it's picking the biggest companies, right? And it's not selecting them. It is what it is. So in terms of, why is that better than a stock? I mean, the only thing that it's better for is you as a client or customer don't have to worry about the specific things that can happen to that company, be them good or bad. When you own the entire, Canadian index, you just say, well, I'm invested in Canada, right? And I like Canada for X amount of reasons. And the great thing about ETFs is that now you can be invested in Canada, and you can also be invested in Europe and emerging markets, and, narrow yourself down to Australia if you really feel that that's something that you want to do, right? So that's the real benefit, is that it's giving people a lot more access than they ever had before.
For sure. So it's a lot less risky than going in at one specific stock or one specific company, whereas it's a grouping of kind of like an industry itself.
Yeah, I mean, risks come in all shapes and sizes, and we've seen that especially this year, right? So to say that it's less risky, but it definitely is more diversified, and what you're not doing anymore is you're not dedicating yourself to the success of that one company. That's for sure.
For sure. So in terms of managing risks with an ETF, what are the kind of the key factors we should consider when we are looking at that?
Yeah. Always important to look under the hood and understand what it is that the ETF is actually doing, what the investment mandate is. And the nice thing about ETFs is that's much easier to do. There's a lot more requirements on transparency than what people would have had to go through in the past. Some of these funds that are out there, before ETF sort of came to be and started implementing this pressure of transparency, you had no idea what it was actually doing in the background. And those things still exist, but they're largely concentrated to high net worth and ultra high net worth investors, right? And that's a whole different ballgame. So when we're, talking to regular folks like me or, you guys, you can go through on any of the ETF providers' website and see exactly what's in there and get a pretty good understanding of if there is any sort of, we like the term smart beta, so sort of like adjustment to that index, whatever that is, you'll know exactly what you're getting if you want to take the time to do it. And it isn't that difficult to understand that. So that's maybe not necessarily a risk. It's a good way to do the research. The biggest risk probably is that you have to trade them. Whereas traditionally when you had a mutual fund, you kind of gave the broker your money or, put your money in and your $500 or $1,000 or whatever the case may be, and you got that fund, right? It was brainless. Now your execution can actually be better and your purchase experience is probably better with an ETF, and that's the brilliance of the vehicle, is that it's trading intraday, whereas a fund is settling every day at the end of the day. But you do have to negotiate now, putting your money in, and if you're setting a limit price and it's just sitting there because the market's rocketing upwards and you've been left in the dust, right? Like those are things that you have to go through and you'll start to understand. But it's a learning curve.
For sure. I think that's kind of like the only way you can summarize investing. It's a learning curve, and you're not gonna know until you get your feet dirty in there, right?
That's definitely true.
So Emerson, there's been a lot of like media coverage recently on things about like the futures market, especially because of COVID. So explain to our listeners what the futures market is and how it impacts our economy and decisions that investors make.
Sure. Futures are an interesting thing. The real, and where you'll see a lot of media coverage is, for example, back in May, when all of a sudden the price of oil was legitimately negative. Ultimately, that's all happening in the futures market. So futures are a way to trade the price of a commodity. At least this was the original inception of them, the price of a commodity that you actually can't physically pick up and deliver to somebody else, right? Everything about the stock market is automated. Back in the day, you literally were sent pieces of paper that was like, I have a stock certificate, but even that was relatively easy to facilitate. You can't pick up a barrel of oil, and if I sell you that barrel of oil and I just give it to you, right? Like, it just doesn't work like that. So they had to figure out a way to get around that quite early on. And so what the futures market is basically that ability to trade these contracts back and forth between each other and lock in future prices. And traditionally, the people who are doing this are commodities companies, right? So you have a grain producer or an agricultural company. It's in their best interest to pick a price and sell it for that price, right? Because the prices can do this, as we know. And if you've been paying any attention to the markets at all, right, that's what's happening right now across the board. And so what you're able to do as a commodities producer is lock in a future price. Now, what you're starting to see is this, in terms of that crazy price action, is when oil went negative, the oil traders were legitimately paying to not take delivery of that oil. So because the storage costs have got so high and the price of oil has just become almost worthless, and it's rebounded since then, fine. But it's very sort of away from that normal stock market action. And I would argue that futures, in theory, are excellent vehicles, and in practice are very cumbersome and have a lot of underlying issues with them. And it's actually something that I come across again in my sort of day-to-day as an institutional sales guy, because a lot of where I'm positioning an ETF isn't necessarily ETF to ETF. For one of these, my institutional buyers, it would be an ETF in lieu of using futures, because you're basically trying to get index exposure.
Okay, and so walk us through an example of a trade and how do you kind of like make money on that transaction. So I buy a futures contract. How does a regular investor like me go about that and make money on that?
Yeah, I mean, the first part is you got to have enough money in the bank that you can even use futures, and that's step one. Is they're extremely inaccessible and are largely intended for professionals and institutions to be using. But ultimately, what you would be looking at is if you are long a futures, you're expecting a certain price to come to fruition, and what you are hoping by buying that is that when you take that price, you're hoping that it's actually going to be higher at the point of settlement, and at that point, the seller would be on the hook to pay for that. Now, from the seller's perspective, what they're looking to do is they're looking to sell at a higher price, and hopefully that price is lower at the time that contract expires, because then they've profited from where they would otherwise be to sell it in the spot market. Spot market is what we say when you're saying exchange happens immediately.
Right.
Okay, and so moving across from like the futures market to more, say, different types of investing. in areas like crypto and Forex. I personally don't, I'm not really a fan of them. I never really understood them. I mean, we always scroll through Instagram and see these guys flaunt their Forex trading and whatnot. So
you haven't got rich from Forex yet?
No, I don't know. I haven't tried it. I don't want to try it. I know
especially
yeah.
Especially since we started the podcast, I have like 5 accounts message me every day, be like, "Hey man, this guy changed my life with Forex. Like, you need to talk to him." I'm like, "All right."
In the States, they even get one that's even weirder, and it's called binary options. It's literally just being in the casino. It's yes or no. So either the price exceeds whatever the point is, and you get full payout, or nothing. Like, it's just roulette.
Yeah,
just straight gambling. Yeah.
Yeah. So what are your thoughts on both of those kind of things?
Yeah. So I'll start with the whole Forex thing, and as you're scrolling through your Insta stories, and all of a sudden one of the guys in your feed is yelling and screaming at you is why you haven't joined his thing. It's a total pyramid scheme. It's really unfortunate because, again, it's preying on this lack of financial literacy that's out there. Absolutely no one who isn't one of the 6 banks in Canada and the relevant asset managers should be trading Forex, period. Right? And the whole notion that even that a person could profit from it is honestly going by the wayside as well. There's so many things that affect the way the currency moves. A human being simply cannot account for all of those things. We don't even really have computer systems that account for all of those things that are happening from time to time, right? So you've seen through history, some of the most sophisticated people get absolutely burned by this stuff because you just cannot predict it. So, when you're looking at things like that, where it's like, oh, well, I'm trading, currencies or whatnot, I don't fully understand the pyramid scheme. I know that it is one, and it's a really dangerous game to play. And you can, in addition, you can get seriously burned on it because you just don't know what's happening under there. The crypto thing is a bit different for me. I feel that there's something there. I don't know what it is yet. And when I look at everything that's out there, yes, I agree with you that I think there's more bad than good. But, and it's definitely not a currency. That's part number one.
Yeah,
right.
We're not going to the blockchain standard anytime soon. The whole reason that we got off that was because governments like controlling their currency to a certain extent, right? Even the most liberal economies such as ours, the United States, I mean, they just started printing tons and tons of money. They want that control. So to have, any notion that there's going to be this independent, free floating digital thing that we're all going to be exchanging back and forth, it's not going to happen. Now, with that being said, I think there is a lot of advantages to it. I know that, there is super mobility with it, that there is, but I see it more of like a gold comparable. But again, this is just if people believe it has value, right? And you can make the same argument for gold, right? Yeah. We all believe that gold is currently $1,800 per US dollar. We believe that. And I guess that's because you can hold it. But you know what? There's a lot of things that you can't hold that we believe has value too. So I do think there's something there. I think it's really, 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 really early stages. I think a lot more really smart people, much smarter than myself, need to get behind it and figure out a way to make it accessible and what's going to work and what isn't. But I know that is happening. I was actually at a conference in January, which was a very large ETF conference, the largest in the world actually. And the main focus of it was talking about crypto and where it's going. So it's getting there. It's still a very dangerous game to play right now.
Did you hear that recent story, the Twitter scam that happened recently?
With the Elon Musk thing?
Yeah, Elon Musk. Who else was there? Who else was it?
I think Joe was
I don't know who else it was. I just saw the Elon one. My buddy sent it to me. And
yeah.
I mean, the weird thing about Elon is we both believed it initially.
Oh. Yeah, no, and I think these scammers are so smart to do that too, because Elon is like a marketing machine and he'll do those kind of weird things. And who knows, he was probably high or something. You never know, right? So, I mean,
he's a super smart dude, but
yeah, I don't know. I just found that funny. So you mentioned one point there of some financial literacy that a lot of us have not been taught in school, or for lack of a matter, even in university in some cases. And so there's a huge difference between actually fundamentally learning finance and just learning how to do math and just the concepts and economics and stuff like that. So how can we kind of like, there's schools, but like outside of school, how can people do or better themselves in terms of building that financial literacy?
Yeah, this is not an easy answer, and it's something that I think about a lot, and I'm happy to be talking to you guys about it, you know, for whatever my opinion's worth. But I think it's a huge problem. And honestly, my personal journey in this whole finance industry started with a lack of financial literacy. Out of university, my family went through an extremely difficult time. We lost just about everything. I went from, in the first year of university, being non-qualified for OSAP whatsoever, to the final year being like the top bracket. Wow. And so it was tough. It was tough for all of us in our own different ways. But it made me have to look really inward and say, I don't want this to happen to me again. I don't want this to happen to people that I'm close to, be it friends or family. And so if I can learn more about it, that's positive, not just, again, for me, but for everybody else, so I can kind of help. Because it's scary, man. Like, it's really, really intimidating, the whole thing. And you know, after working in this for 5-6 years now, like, it's designed to be scary. It's entirely designed for that, right? And right down to, like you said, pointed out in the system, right? Like, there is no financial literacy. That just changed right now. And I mean, I can't help but be skeptical of what that's going to look like. It's a great first step, but it's the first step of many. So I think one of the biggest things that I would, is sort of like a word of caution, is that there's so many people out there that are writing about it, and so few that are pointing people in the right direction, right? And there's insane bias everywhere. So one of the biggest things is always look for people with accreditation. The CFA is not the be-all and end-all by any stretch, but it is a rigorous program that I'm trying to get through, and hopefully this year we'll not be doing that test anymore. Yeah, it's level 3 in December. Yeah. COVID let me think about it for a little bit more.
Buy you some time.
Yeah, exactly. So books are great. I mean, books are fantastic. You know, there's like I said, there's tons of stuff out there. But I think that, you know, it's always important whenever you're researching any subject to understand who is the person writing this. But I think that it is terribly important with respect to this, because anybody can write about finance, and further to that, anybody can write about finance and get themselves on BNN. There is tons of people on BNN week over week that absolutely know their stuff and are perfectly accredited and respected investment professionals. And there's some guys that picked up a pencil one day and started writing about it and making a lot of noise, and they're on it too. And they have just as much weight when they're on that program. So there's a lot of minds out there. There's a lot of minefields out there. But yeah, I mean, getting started and getting learning. But the biggest thing is making that first jump. If you're a person who's like, I've got money, I know I should be saving. I also know I should be investing those savings, because that's really the ultimate goal. Opening the direct investing account and just starting to get your feet wet, you'll make mistakes initially, but it is, as we said earlier in this, it's always a learning curve. I learn something every day that I've done poorly that I can do better tomorrow, right? And especially with our level of wealth right now and the age that we're at, you know, it's not super important to have tons of money in the bank, right? Like, it's not where we need to be worried about it. We don't have dependents. We don't have, you know, we're not trying to put kids through school. We're not trying to, you know, save for retirement. So having that level of understanding now, if nothing else, just to make all the mistakes early on, so that you kind of understand a little bit more as you go through life, is super important.
Yeah, and actually I have a story about that. Like, so while I was at Laurier, I started a non-for-profit, which was a financial literacy organization. So I had a couple classes done for like Peel schools. And then I had a meeting with one of the senior kind of, I guess, education directors. I don't know what their title was, but So they started asking me specific questions around, what are you teaching? I'm like, financial literacy. They're like, we're not really looking into that or incorporating this. And remember, this is like 2012, 2013, around there.
Right.
And so I posed a question to her, like a simple question. I'm like, she's like, she was talking about her daughter in school. She's doing really well, blah, blah, blah. So I posed a question to her. I'm like, does your daughter know what a mortgage is? Does your daughter know how to buy a car? Does your daughter know what a lease or finance is? And she's like, she doesn't need to know that. And I'm just like, you're setting her up for failure. Like, these are the specific things that you kind of need to know. And me kind of grilling her, obviously I didn't get no contract with Appeal, but yeah, I mean, it's those kind of things where it's just like, lack of a better word, is like, we need our education system to really take this seriously, because
absolutely,
me coming out of school, I'm still learning a lot, and I've made mistakes. And I think for a lot of people, like, there's no like late time to start, just start, right? So even if like we're all around the same age, 27, 28, and you haven't made a dent in anything, start now. Like, there's a lot of time.
Yeah, absolutely. Absolutely. And it's always, you know, it's one of those things where I've always found that not only does the industry want you to be really scared of it, but it seems like just in general society wants you to be scared of it. You know, the people that actually know what they're doing kind of like look down on people that have no clue, and are like, well, how do you not understand how to buy stocks and bonds? Like, it legitimately is, you're betting the house on, does your father or mother, you know, have a job in finance, or, you know, some financial something, or did they have a parent who understood how the stock market worked and passed on that information, right? And even then, you know, maybe your parent does. I mean, there's a lot of people out there that don't have the best communications line with their mom or dad, right? Like, there's just so many factors that can end up with you just having no clue where to start. And it's pervasive. It's really pervasive, but it touches everybody. And that's what I find so strange about it, right? I don't want to diminish the amazing role of doctors in your personal health, but I mean, money is really important, right? And it shouldn't be something that you want to strive to only talk about in your life, right? But it does affect everybody. Yeah.
It's kind of like, it's one of those things that, like, it's almost taboo sometimes. Like some families, or I shouldn't say some families, but some individuals kind of look at it as like, don't strive for money. And it's like, it's a different mentality. Like, it's not about just focusing your life around money. It's like, it's focusing your life around the understanding of money, right? Yeah,
exactly. Yeah. So, I work in the money industry, and I find myself catching myself and being like, you know, this isn't the most important thing. It certainly isn't. But it is important to understand it, because it can go the wrong way on you so fast.
Yeah,
for sure. So one of the things that I actually saw recently, and I mean, I'm not sure if it was you that posted this, or if you like to post similar to this, but it was kind of like, it was a graph comparing different age groups. And where their stock, and where the stock market was during their teenage years. So it's kind of like, it kind of shows you the mentality of those generations of how they view the stock market. Right. And so it's like, if you were one of the baby boomers, the stock market is like this amazing thing. Or if you're a millennial, it's kind of like you've went through 2 economic downturns that were kind of once in a lifetime, twice in a span of 10 years. Right.
If I can find that chart, I'll actually show it to you. Like, the baby boomers, like, there's like literally it goes exponentially up. And then you see like millennials and like Gen X, and it's just like up and down. And then for millennials, obviously we've seen like 2 downturns already. So and major downturn. I'll send you the graph after, but it's pretty interesting.
Yeah, that would be cool. That would actually be super helpful.
Yeah, I saw it and I was like, I understand why I was terrified about this. Like,
yeah, 100%. I mean, I've worked with institutions. I've worked with a lot of advisors across the country as well. The 2008 event is so fresh for people, professionals. Like, that rewrote how everybody viewed risk. People didn't have risk management departments before that. They didn't think that was possible, that could be allowed, that the U.S. banks could just sort of run all over the place and do whatever they wanted, which is mind-blowing, because that's all they do. So I don't know why that was so surprising, but it was. And there's tons and tons of people who take a super risk-off approach now, which is almost just as detrimental as being too risky, right? Because forgoing all of the gains that happened between 2008 right up until the start of this year, or right now because everything got reversed, which makes no sense to me, you would have missed on a huge amount of capital gain appreciation opportunity, right? And so, but so many people were so shaken by that event that you're right. I mean, it's our perspective on what this whole thing is radically different from everyone else's. And with the experience that it's been in the last 4 months, since March, since that, obviously that was the most severe correction to crash that we've ever had. I will use the word crash. It was bananas for 2 weeks. It was just insane, the slide. To have it whip back this fast, but every single day it going, 2% up, 2% down, 1.5% is absolutely uncharted territory for everybody. Yeah. So it's depending on where you're born, and that you're right, that definitely adds to that whole idea of your parent being like, well, you just buy your Canadian savings bond and you make 17%. Like that's never going to exist again, ever. Doesn't happen.
Yeah, for
it's
sure.
It's a totally different landscape.
Yeah. So let's talk about that. Like, obviously, with the pandemic right now, and we had our economic shutdown, again, once in a lifetime for the second time. And we saw the stock market, like you said, it crashed and then it rallied. And now it's like, we're in limbo where it's up and down. We don't know what's going on. Yeah. It kind of seems like we're hearing news every now and then, like, but hey, this stock is up now, or this industry is up now. So like, what is going on here? Because to the average investor, it's kind of like, we thought this should be down. We thought there should be nothing going on, right? Like, so can you talk to us about what's happening right now?
Yeah, for sure. So here's the first thing that I'll say. It's very important to remember that the stock market is not the economy.
Right.
It is supposed to be an accurate representation of the economy, but it is not the same thing. And that's something that I've had to remind myself of through the last 4 months more than ever, because what's happening in the stock market is not indicative of what's going on in the economy. So we had the Bank of Canada announcement yesterday on their conversation on where they were going to keep rates. Tiff Macklem basically got up there and said, buy a house now if you have the money, or do it in 6 months or a year, because rates are going to be this low for a really long time and your mortgage is going to be in great shape. Mm-hmm. And then in addition to that, they also said what their expectation for GDP was this year, and it's to shrink by 7.8%. That is a huge number.
Yeah.
Right.
And so when you're looking at your stocks that are doing nothing but going up, but the actual reported earnings and results of companies on a quarterly basis are getting absolutely whacked, these things don't add up. And I don't know where things are going, right? I mean, I think I've said the word unprecedented more in the last 4 months than I have my entire life. The unprecedented amount of stimulus that was kicked into the economy by the US Fed, by the Canadian Fed, by all central banks across the world. It's not for me to say that I expect that there is going to be a crash. It makes sense to me that there would be one, but we just don't understand what that amount of money can do. And it can do quite a lot. It's an insane sum of money and financial backing. So, and for all intents and purposes, the US Fed and Canadian Central Bank believes that they have more in the tank. So if this happens again, what's not to say that they can kick in again? So ultimately, does this make sense? Is this a terrifying market scenario? Absolutely. It doesn't make any sense to me whatsoever. The CFA says that this isn't supposed to happen, but here we are. That's academics versus reality, right? And it's, I mean, getting started investing right now, I can't think of a worse and more terrifying time to do it, honestly. But, at the same time, you kind of have to look at it and be like, well, if not now, but when? So the other thing to remember is about people our time, of our age is remember the perspective of how long your time frame is. Right? I mean, if something horrible, if you put all your money in the stock market tomorrow and then the next day everything goes to hell, you've still got a 20-year time horizon or however long it is, right? I mean, you'll use money here and there for different life events, but with the ultimate goal of getting to those, massive accumulations and using, big life event purchases, you have a lot of time on your side. So better to start than not.
For sure. So essentially we don't have a clear understanding of where the markets are headed. And so just to kind of take that back to our initial point, like again, from 2008 to now, this is like the second time, especially our generation, the millennial generation, is dealing with something like this. So
Absolutely,
it's kind of like we enter into this world without a concrete understanding, and then we deal with these two events, and it's like we don't even know where the understanding is. So like in your day-to-day working in the ETF industries, like or just dealing with capital markets, what is your insights or what are your findings with our generation, with millennials? Like, do you find that they're more involved? Like, are they actually more inclined to be involved and to learn about it, or are they just more like, hey, I don't even want to deal with this?
Yeah. It's a great question. It's a tough one. What we do know is that we're very different. Is that millennials are very different from the traditional, investment mandate per se.
Right.
I would say on the whole, it's a lot more hands off. I don't want to paint the ugly stereotype that we all get painted with often, but I think that because people of the prior generations looked at it as that you save, you buy a house, it's just that we do things differently, right? When we have and quite frankly, you used to be able to buy a house for $30,000 again, like that doesn't exist anymore, right? So, what is my incentive to save up so that I can get a 20% down?
You can't even get a parking spot in Toronto for $30,000.
Right. Right. So, our goals are different. I think that on the whole, millennials are actually quite skeptical. And again, it's to your point. I mean, within the last 12 years, we've had the two most significant market corrections that we've ever seen, right? Like our normal is totally different. So one thing that I would say is it's not necessarily that we care more or less about investing. I think that millennials care about it in a different way. And so one of the things that's come to the forefront in the last sort of 4 or 5 years, but especially this year, is this concept of ESG investing, or environment, social, and governance.
Right.
And basically what it is it's sustainable, right? And it's funny because when you start to really boil it down, it really just should be, critical factors that will make a company successful going forward, right? They care about their stakeholders, not just their shareholders, right? There's their employees, the area that they're polluting, how much are they cleaning that up, right? It's all areas that will set a company apart from this old school mentality of profits only, right? I mean, the era of Henry Ford is over.
Right.
And so I think the millennials do care quite significantly about this, and the advisor community in Canada, which for the record has an average age of 57 in this country, is struggling to come to grips with that. Because what you're seeing now is that millennials haven't been evolved to this point because they don't have any money, but they're going to get it. This huge generational transfer of wealth, right? It's that fat bubble of where our demographic is, right? All of a sudden, those people are going to start bumping down their wealth and donating inheritance, and all of a sudden millennials have money and say, well, I don't necessarily want to do things the same way, right? I don't only care about how much money I'm making. I want to do that, but I also want to do that by maybe not owning gun companies, right? Like there's lots of ways, there's lots of companies that operate legally that you kind of like look at it and you're like, wow, that's mind blowing that they're a publicly traded company.
Right.
But they're out there. And I think that's the biggest thing is that the ESG push is largely pushed by the millennial community. But up until this year, it was a lot of talk and no go. This year, there's been a huge push into ESG, which is really nice to see.
For sure. It's like, yeah, I definitely think that there is a trend for millennials to be more ethically involved in where they're putting their money. It's kind of like, we want to know that we're making a difference almost, right? Like, it's kind of like what our generation stands for. It's like, what is my difference in the world?
It is the stereotype, right? But I think that rather than saying like, it's because we're whiny and we want to make a difference, like look at it from the positive, which is that, I think the world's pretty screwed up right now, and I think we'd all like to see it be better, right? And so, love it or hate it, a really good way to make that happen is get corporations to do it for you, right? And lead the charge on it, because they're the ones with the fat pockets, right? Mm-hmm. Let's look at here's another thing that just happened, right? So this should have happened ages ago, but the Washington Redskins are changing their name finally.
Yeah.
Well, it's not Dan Snyder. He's an awful person, right? Their owner is a terrible human being. But FedEx, as their title sponsor, finally went to them and said, enough is enough. You got to change it. And look what's happening.
Yeah.
Right.
So,
a lot of money. A lot of money.
Exactly. When the choice is, choosing between I'm a terrible person versus I don't have money anymore, it's a pretty easy decision 10 times out of 10. So, that's not necessarily the best ESG example,
yeah.
but it is an example that a lot of the positive change will come from the private sector.
For sure. And that's probably that's probably the good side of investing with millennials, in terms of what they value and what they're looking at when they're viewing companies and analyzing them. But do you have any insights on kind of what our generation is doing wrong when it comes to investing? And I think you touched on one of them already to say, hey, like maybe there's a line that we're crossing in terms of being too risk averse, but is there anything else along those lines?
Yeah, I think that the biggest thing is just not knowing where to start, and it's circling back to everything that we've spoken about. Again, I'm on your chart, right? Of like, what is your perception of the stock market, right? What were you born into, right? And our perception of the stock market and what investing is so radically different. So I think that a ton of people face an insurmountable or feeling insurmountable amount of information and lack of understanding. And they kind of just are like, screw it. I don't know what to do with it. Right. I'm an engineer and I've, gone to school or I'm a tradesperson or whatever the case may be. Right. Like, that you have to save this money, but like to go and start investing and figure that out with all the twists and ins and outs and the ways to do it. I had actually kind of funny, one of my best friends, asked me how to start just in February or March, actually. It was right. And so his dad, who I love, yells at him one morning, Chris, go buy the banks. Right. And so my friend calls me and he goes, okay, so he wants me to do this. I don't really know if it's a good idea or bad idea, but I think it's a good idea. And I was like, sure, why not? And he goes, okay, so I got to go to the bank first. And I was like, there you go. Right away, we've got a problem, right? Yeah. So you can't open a direct investing account at a bank branch because it's a different part of the bank.
Yeah.
Like, to most people who don't work in this industry, that doesn't make any sense.
Right.
And so there's just endless roadblocks and misinformation out there. And it's really tough to get a grasp on. So I do think that there is a level of, it sort of appears like it's apathy, but I honestly think that it's just the information gap is so huge now to what it used to be that I think people are petrified of it and therefore not doing enough of it.
For sure. And maybe this is kind of like a different perspective on it. And I want to get your insight on that. It's just that, like, there's such a big lack of information and a lack of financial literacy for that generation. But at the same time, it's kind of like we had the tech boom, which kind of introduced us to so many opportunities to have these, right? Like, we wouldn't hear about mobile investing. We wouldn't hear about Wealthsimples and things like that. So it's kind of like, what should we be doing, or where should we be looking for that investment knowledge, or just to gain that knowledge, right?
Yeah, it's hard. I think Wealthsimple, actually, to shout out a company in terms of what they're trying to do, and not from, like, their investment platform is awesome, right? But the other thing that they're trying to do is they are trying to do sort of like investment 101 type content, right? And so other companies such as that, the robo-advice community across Canada has been awesome for that. To name a couple other ones, Wealth Bar, Just Wealth, Invisor, and I'm forgetting one. It'll come to me in a bit. Awesome companies that are trying to do the exact same thing as Wealthsimple, but first and foremost, trying to educate. So that's a good way to do it if you know that you need to do it, but you don't necessarily know how to start on your own. But taking it one step further, if you do have to start doing it on your own, I think just going old school and reading, right? And going through finding material that makes sense to you, not necessarily reading, in How to Invest for Dummies, but, but along those lines, right? Honestly, I mean, having some information is better than none. So, but it's hard, right? I think the biggest thing is you probably want some level of understanding first before you jump into it, even though I've also said doing it is really important. You don't want to go in totally blind and get, your head ripped off.
For sure. So I'm a brand new investor. I am trying to learn the ropes, and I'm just going to go for it with my limited knowledge.
I think you've got to do it yourself is the biggest thing. I mean, the number one mistake that I think a lot of people make is that they'll end up in their bank branch, right? What my buddy was going to do. Right. And what he's going to end up doing there is get slotted in a GIC, which is locked in for 5 years so that you can make 0.5%. It's absolutely the wrong thing for someone our age to be in.
Sure.
But they're salespeople, right? Where, at some point, it's not about what's best for the client, right? There's a lot of that out there. So I think starting yourself is super important with a limited amount of money so that you can't hurt yourself, and, starting easy, and ETFs are a great way to get that access. A really fantastic way. You're in the lowest cost possible things you can be in. And you're starting to get your feet wet, but you're not necessarily going to blow yourself up, which is really, 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 really good.
For sure. Yeah. So that's what I was going to get at. So assume I'm like a brand new investor and I have limited knowledge. I have a foundational knowledge, and I'm just trying to learn the ropes. I got, let's say $1,000, and we're in this current environment of financial uncertainty. What should I do with that $1,000? Like if you were to give your best advice in terms of where I should kind of split that up, how should I go about to invest that so that I can mitigate risk?
Yeah, so I mean, I think definitely starting with, funds rather than individual securities is always a great way to start. I'm an advocate for ETFs. It's not to say that mutual funds are bad. It's just a lot easier when you're going through this learning process. They are better execution vehicles. And starting to look at, sites like ETF.com, or there's, off the top of my head, there's not a ton of Canadian ones that are aggregating this information yet. CETFA is actually a really great organization. It's the Canadian ETF Association. They're a really great resource, actually, on ETFs alone. That would be a really good place to start, but it is scary, right? And so, what you want to start with is you want to start out really, really basic, stay close to home, and you're starting to look at, things that are large capitalization. You're wanting the biggest companies, and also have some fixed income in there, right? It's for a rainy day. That's your balance. That's why the balanced portfolio was created.
Right.
But the other thing to remember as well is where, and I mentioned this before, is what point are you at in life, right? And so, again, we're risk averse, right? So a lot of people will get in and say, well, I don't want to lose money, so I should just put it all in bonds, right? Because I've heard that bonds are more safe. Well, that's just not going to get you where you need to go, right? And so that's the biggest thing is taking the leap, but also doing it in a smart way. And then the biggest piece of advice I could give is don't check it every day.
Yeah.
Because that's how you'll absolutely run yourself into the ground.
Yeah, especially during times like this, you can't be looking at it every day.
Absolutely, yeah. No, I think the Robo Channel, the guys that I listed are awesome ways to get invested and get initially invested. I mean, you've got very, very little to almost non-existent account size minimums. You're not even necessarily doing anything there yourself, but you at least you're watching, right? At least you're seeing how. Things will go up and down on a daily basis. This massive economic event happens, therefore these things fluctuate, right? Emerging markets, whatever the case may be, right? And ETFs are great because they'll give you a diverse look at everything. So you can start to experience that. So that's a really cool way to do it. And if you want to do it yourself, you can start to move that way as well. For
sure. Yeah. And we're definitely going to include all those robo advisors that you mentioned when we post this up, because I think that is a good instrument for everyone involved to kind of check those out. So yeah, I think we I've been grilling you kind of on your background in the market a little bit just to get as much out of you as we can. But we like to pivot into kind of like a lighter segment where we just like to get to know you.
Sure.
So we're going to give you like a lightning round. Unless someone has any last questions here, we're going to switch over into a lightning round.
Yeah. So before we get to the lightning round, let's talk about our favorite company, Tesla.
Yeah.
Okay. I don't know. They've been trading on a multiple of, I don't know, I think when I last read it, 300x something.
I don't think there's a number for it anymore.
Yeah, like I honestly don't know. I mean, I love Elon Musk. He's a genius.
Yeah.
But again, when we separate actual like you're obviously you have your CFA going for you. When we go through our CPA, we have foundational processes as well, and none of those are being followed now. So with this company, like what's going on? I mean, it's obviously like the hype around Elon, the company.
Yeah.
But if we just look at it from a financial standpoint, nobody's really going to be buying cars if this kind of economic downturn is going to be coming about.
Tesla is a really perfect example of the nonsense that's going on right now, because you've hit the nail on the head, right? Like, there's nothing about what just happened that would insinuate that all of a sudden people will be buying cars. Outside of that ESG thing I mentioned, where people are really putting a big push on, caring about the environment, right?
Yeah.
It's weird that all of a sudden this year, everyone's like, oh, wow, we have a climate change problem. But like, we have a climate change problem. Right. So, but yeah, I mean, buying a $120,000 Tesla to solve that and do your part, probably not where most people could start. So this company is being bought and sold on the basis of future expectation. And I think that ultimately is what the market is trading on, is assumptions of what will be. Here's another good one, and I don't want to bag on a Canadian hero, but Shopify. Now, Shopify, at least you can start to wrap your head around, okay, all of a sudden we're all put in quarantine. Online shopping becomes essential. The only connection that I have through the world right now is through Amazon, and Shopify is there poised to benefit from all of that, right? So their stock doubles in a bit, right? They started the year at $500. There, I think I checked today, and I think they're at $1,200.
$1,255 end of day today.
Perfect. So they're at $1,255. Now, does that number make sense in that growth? No, probably not, but everything's on a rocket ship. But at least with Shopify, you start to wrap your head around a story that plausibly makes sense. Here's the thing. Before I got on this call, I wanted to make sure that I have my number right. Shopify still has a return on equity number that is negative. They are not profitable. So it's a crazy, crazy market that we exist in right now. It's being driven by a lot of expectation and not actually looking at what is going on the underlying. We've lost sense of what the underlying value of companies are. I blame the finance community for a lot of that, because I just refuse to believe that everyone who's on, Robinhood has enough weight to move the market in this significant fashion.
Yeah.
Yes, there absolutely is a huge amount of retail content, but institutional isn't absolved from that. And we got to get back to reality at some point. I don't know when that's going to happen, but it just can't go on like this. And the Teslas of the world, again, I agree with you. I think Elon Musk is an innovator. I think he's a brilliant, brilliant man, generational mind. He's a really bad CEO.
I think has he won the award? I think he's won the award for worst CEO, but don't quote me on that.
So.
I don't know.
I think so.
I'm pretty sure he has, but he's still one of the. Yeah, go ahead.
Yeah, no, I was going to say typically, purposefully going out to upset the SEC isn't normally what people want out of their CEO.
Yeah.
Right. I mean, it looks like he's headed for a vice presidency with Kanye, so we'll see what's with that.
No, he dropped out. Kanye dropped out.
That lasted like a week. That was it. All right.
It's all publicity stuff, man.
It was the whole thing about that he couldn't be elected in like 8 states because the registration closed. It was too late. Yeah.
Oh, okay.
Not to say that he would have gone through with it anyways, but
it's Kanye. Okay, let's get to the lightning round here. So
missed 2010 Kanye.
Yeah. Okay, so the lightning round's basically we have a couple questions here, 5 to 10 second quick answers. So I'll shoot you the first one. Favorite book of all time?
Liar's Poker by Michael Lewis. It's the prequel to The Big Short, and without it's essential if you're going to understand the whole story.
Sweet.
Love it.
So obviously we know you work in the finance world. You have a hectic schedule. How do you unwind after a long day?
Video games and too many of them, which is not necessarily, I'm not good at the whole unwind thing, but I'm trying. Usually going on Warzone and getting shot a bunch and dying makes me more upset, but yeah, I'm trying.
It's still worth it, right? So yeah. And so what stock would you recommend investing in today?
Oh, this is such a hard one.
Yeah.
We will hold you accountable for this.
I wouldn't recommend buying any stock right now, and that's my honest truth, but I think that the one that I have always loved and continue to love, even at the number that it's at, is Google. I think what they've done and what they continue to do is phenomenal. And I think that the most important commodity that we have in our world now is information. And I just think that they have most of it and the best way to it all.
And last question here: who is your biggest role model?
Ooh, who is my biggest role model? So this is an interesting one. It's a gentleman named Michael Lee Chin, who, Aman, I know you probably know because he graduated us. So I, after living in Brampton, moved to Burlington. And our house was a 2.5-minute drive from his compound, which is Portland Holdings. Sorry, is it Portland Holdings? I believe it's Portland. Yeah, Portland Holdings and Mandeville Wealth. It's a company so Michael Lee Chin's story is absolutely unbelievable. Jamaican immigrant, moves here to Canada, starts at Investors Group as like a low-level mutual fund salesperson, ends up like absolutely dominates the whole game, starts his own company. He's now like one of the top investors in Canada and just the warmest gentleman when you meet him. He's so enthusiastic to tell people and help people in that story. And it's incredible for me. And my best friend also is a Jamaican guy. We moved to Burlington in the same week, which is super obscure. He moved from Jamaica. It was basically the same. So there's sort of a warm part of that for me as well. Just knowing what that country really goes through and seeing a man come from that scenario and end up where he is today is truly amazing. And also he's hands down one of the top 3 salespeople in the whole industry. That's not his job, but he is.
Sweet.
Sure,
I mean, when he gave us our speech, I found it pretty resonating too. It's just like, one of the things he mentioned is like, there's a lot of opportunities out there. Like, you don't know your path like from day one, but keep on like hustling and learning, and eventually, you'll get somewhere, right? So that's kind of the whole approach he took. So I think, great mentor there. Emerson, we want to thank you a ton for being on. Really
I really
insightful.
Appreciate it, guys.
Really insightful. I think this is going to help a lot of individuals, especially some of our younger folk that are listening in, and even individuals our age. I mean, we still have a lot to learn. You taught me a lot today too. So thank you for that.
Yeah, for sure.
Awesome.
Thank you again, man. I appreciate it a lot. And you talked me into understanding Elon a bit more. So we'll see. We'll see what happens soon.
Cool. Thanks so much, guys. I really, really appreciate it. And this podcast is a phenomenal idea, and I hope and believe you will have all the success with it.
Thank you.
Appreciate it, man.